only about 25% of mined silver every year actually comes from a silver mine. 75% comes from mining other metals. Silver is a byproduct. 75% of mined silver comes from gold mines, copper mines, lead and zinc mines. So silver depends on mining these other metals. We're at a point where we're consuming 20% more silver than we're producing every year already. And the Silver Institute thinks that we're going to see new record deficits over the next 5 years, not less. They don't see supply actually increasing at all, despite being at 20% demand over supply.
This is Little by Little with Andy Schechtman.
All right, everyone, thanks for coming back and joining us again on another episode of Little by Little. With me today is Peter Krauth. Peter is the author of the book, The Great Silver Bull, and the editor and publisher of the Silver Stock Investor. When I think about undervaluation, when I think about the term, Peter, asymmetrical risk reward, which basically means what offers me the best upside with the lowest downside. It's interesting. I think of two things. I think of silver and I think of mining shares. Now, that's right up your alley as an expert on silver, someone who's written a book on silver and someone who focuses on silver equities. When I think of mining shares in general, whether they be gold or silver, to me, they are the most ignored and undervalued and underappreciated sector in the equity market. When I look at their valuations right now, I see them lower than where they were when silver was much lower than it is. And so I think that it's an opportunity in both areas. And that's one of the reasons I'm glad to have you on here to talk about these opportunities and why things are the way they are, why it's taken so long to get to where we are and what the future holds. So thanks for coming, Peter. I appreciate you being here, buddy, and I look forward to our conversation.
Yeah, thanks, Andy. The pleasure's mine, and I'm certainly looking forward to it. Hopefully I've got something to contribute.
Absolutely, absolutely. So let's just jump right into it. Some of the comments that I've heard you made along the way, I really, really, really agree with. One of which is the significant amount of paper silver relative to the physical supply. In other words, this is the same environment that the Hunt brothers recognize, that there's far more paper than there are bars standing behind it. And considering the large short positions held by the major bullion banks, where right now we have 8 banks, Western banks, that control the largest concentrated short position in the history of the COMEX market. And to me, it's as dumb as a mud wall. But when you realize you have 8 commercial banks from the West that are stepping on the price of silver to keep it down, and I have my thoughts behind it. But I'll just ask you a softball question. Do you think that the silver market is manipulated?
So my quick answer to that is yes. I will qualify it, I guess, by saying that I certainly feel that that's the case, and especially in sort of the shortish to medium term. By that, what I mean is that I do believe that there are games being played and that pressure is being kept on the silver price. And then when I step back and I look a little bit of, just from a sort of a higher level, both silver and gold. If I look at what's happened over the past, say, 15 or 20 years, back in 2001, gold was $2,500. Silver was about $4. Today, gold is more than 10 times that. Silver is slowly approaching 10 times that. So I like to think, I hope, that despite what I believe happens in terms of manipulation and pressure to favor lower prices for multiple reasons, that over time, these things cannot be suppressed, and that the prices, the true prices, eventually tend to manifest themselves. And I think that, if you look over, as I say, a reasonable amount of time, that does play out. And so I guess I'm saying it partly because I want people to not let that be a reason to not participate in the market, because I think that, the upside and the protection it offers is just so tremendous.
I couldn't agree with you more. I mean, it's always been a topic to tread lightly. People would say that to me, you focus on the suppression and you may turn people off. And I agree with that. And I agree with the upward trajectory, albeit perhaps muted, all of which I agree. And I do think that the only way that you can successfully manipulate a market over a period of time is to push it in the direction that it is going. And when you see the demand globally creeping into the ether, if you will, it's becoming a very dangerous game. And you're right, it has appreciated. I guess when we look at money creation and we look at inflation adjusted numbers, when we look at the crazy world, when we look at all of these things, one would expect instant gratification. And that's not fast enough for most people. But I think the suppression is very difficult to ignore when you take a look at the concentrated short positions on both COMEX and the LBMA, which we're going to dig into here in a few minutes. But I appreciate your candor and I agree with it. I do think that although it has been muted, it is certainly moving in the right direction. We'll only continue to do so. With that being said, one of the things that you've talked about, and I try and when I have someone on the show, I try and at least do as much as I can, as busy as I am, to understand the way that someone like yourself or anyone that I have on the show looks at the world. And one of the things that you have talked about is that the inventories on all three of the major exchanges, the COMEX, the LBMA, and the Shanghai Futures Exchange or Metals Exchange, have dropped significantly over the past 3 years. In fact, I think the number that you used was a reduction of roughly 40 to 50%, and also draw a parallel to what we're seeing in the ETFs, all of which I agree. In fact, I've been saying forever that this is something that people need to pay attention to. Since 2020, we've seen this bleeding down of the inventories. And so on top of that, I'll add a little color to that. In an interview I've done with Sean Kuhn from Dolly Varden, he mentions that he's seen Chinese companies flying through Latin America, buying up, meeting directly with the miners and buying the doré and the concentrate directly from the miners, disintermediating, if you will, the bullion banks and the market. They're paying far more than the West will pay for the doré and the concentrate. And for those who don't know what doré is, that's a crudely refined bar that the miners will crudely refine to 40, 50% and then send it in for further refining. The concentrate is like a sludge as a byproduct of all of this. And they're paying far more than the West will and shipping it back to China for refining. On top of that, we see India, and this is a tweet that I saw that you talk about, Indian silver imports surging 572% year over year in Q3 of this year. And I would add to that empirical evidence says they've bought between 800 and 900 million ounces over the last 3 to 4 years. No one is buying silver at the level that they are, it would appear. And just going back to China for 1 minute, they are the second largest producer of silver in the world. I don't think many people understand that. Being the second largest producer, flying to get concentrate in doré, India making this massive push to buy silver, and it's very obvious when you see the numbers. And then, of course, the last piece of the puzzle being Russia, being the first country I can remember coming out and saying, hey, we're going to add silver to our strategic reserves. Now, most countries only add gold. Whether or not they add silver, they only talk about gold. So with all of these developments, the draining of the exchanges and the big three in the BRICS conglomerate, Russia, China, and India, doing what they can to accumulate silver in a massive way, do you believe countries like, I guess my question is, do you believe that these countries like China, Russia, and India are acting in a coordinated and a motivated and a determined manner to take delivery and systematically drain the Western exchanges, leveraging the suppression against us that we have in the West? In other words, if we're foolish enough to not let silver find its true value, are they exploiting the one part of the COMEX and the LBMA contracts that no one ever did, and now they are in mass by bleeding down these exchanges, they're standing for delivery. Do you think that this is something they understand and they are using that against the West in essence?
I do think that they are a big part of draining those inventories. You don't have to look anywhere beyond the demand from solar. Solar has become a huge portion of silver demand. And it's not just, I feel like I need some silver this year because I'm worried about inflation. This is steady, absolutely growing demand. In 2020, if you look at the amount of silver that went into solar, it was about 80 million ounces. This year, it's supposed to be about 230 million ounces. So it has tripled in a span of about 4 years. It's just incredible. It's now the largest single industrial use for silver, and China dominates solar production to the tune of 80% globally. So there's no question they absolutely need this silver. They cannot do without it. And I can tell you sort of anecdotally that one mining company that produces exclusively silver, actually, Fresnel, they have told me that they sell about half their production to the West, the other half to China. And the Chinese buyers are coming to them and saying, we'll pay you $2 over spot, and we'll also pay you 2 weeks in advance of delivery. Because the market is just that tight. They absolutely are chomping at the bit to get their silver. And, what you laid out as a case for the East in a coordinated way, looking at tapping into getting this metal, I would think if anyone is driving it, it's China because of their solar manufacturing capacity and needs. And now India in particular, like you've said, I mean, their imports have just gone off the charts. They cut back on their import duties this year in July. We saw, you talked about Q3 being, as I mentioned in my tweet, 500% of what it was Q3 last year. February, and that, February this year, so that precedes the import duties cuts, and it precedes what happened in Q3. February of this year was 64% of all of their 2023 imports, 1 month, pre-duties cut and pre-Q3 numbers. So it's just phenomenal what's going on in India. I think, I've said in my presentations that the International Energy Agency sees India as a huge source of growth of energy. They think that they will be the single fastest growing energy consumer over the next 30 years. And we can certainly see India shifting towards renewable. They said, I think it was earlier this year, they're going to develop a renewable energy park in Gujarat state. This is going to be 5 times the size of Paris. And most of that is going to be solar. Some of the rest will be wind, but most of that will be solar. Well, shortly after that announcement, we saw that spike in February in terms of silver imports to India. And they have a huge, long-standing cultural affinity to both gold and silver. They've seen gold prices, as we all have, hit all-time highs. They're bargain hunters by nature. And so I've read actually in the last few days that many of them are now turning to silver for jewelry consumption, especially now we're hitting the Diwali and other festive seasons for them. They're buying silver and they're buying gold-plated silver jewelry. So they're kind of getting that, best of both worlds kind of thing. But you certainly cannot ignore what's happening in India. They're becoming certainly a big force to reckon with in the silver space.
Yeah, you mentioned the duties cuts. I don't think people understand maybe that the Indian government has decreased the duty or the import tariff or tax that is levied upon importation of silver, which is certainly, one would think with all those numbers you cite being before the duties were lowered, would only exacerbate and incentivize the continued accumulation of silver in China and in India. And, you look at a parallel, their gold acquisitions in the first 4 months of 2024 outpaced everything they bought last year in 2023, which is a record year. So these countries are certainly understanding, I think, the significance. And with all that said, I hear the ooh and some of the things that you say, which tells me you're a Canadian and you understand the significance of silver because it was several institutions, banks, and mining companies up in Canada that recently have petitioned Ottawa to reclassify silver not as industrial but as strategic. And when you see all of these countries buying silver the way they are, when you see, and I'm going to show you a couple of slides in a moment to talk about the suppression, but when you see the overt nature of whether it be the West trying to hold the price down, and I'll show you my empirical evidence on that, or countries in the East trying to accumulate it hand over fist, it begins to take on a significant, at least a thought process that, yeah, maybe this is a little bit more relevant to the world than in terms of it just being classified industrial. And quite frankly, I think it is. I'm sure you do too. Not putting words in your mouth, but I think it's becoming very obvious that silver is far more important than we've been led to believe. So following up on that idea, you've talked as well about the depleting silver in the futures markets and the ETF. So that's what we've just mentioned. But you've talked a lot about this, and you estimate that we may only have, and I watched a presentation you gave, I don't know if it was a PDAC or somewhere else, but where you said only 12 to 18 months before secondary inventories are exhausted. And before I continue that thought, I would like to say this is one of the reasons they say there is no bull market like a metals bull market, because when things start to move up or the world starts to get a little freakier like it is right now, right on the cusp of the election, we're recording this just 4 or 5 days before the election, and heaven only knows what the world looks like on the other side. We've already been through so much over the last few years. I think it's one of these deals where people, the higher the price goes or the crazier the world gets, it only strengthens their resolve. So if I were to call someone back and say, look, you bought, all this silver at $18 an ounce 2 years ago, and now it's at 34, do you want to sell and go back into dollars? People say, absolutely not. No, I would never do that. Why would I want to do that? And so whether it be on the retail side or probably even more structurally imbalanced would be up on the higher levels where silver is needed for industry. It is needed in so many ways that as things start to get crazier, you will, I think, see an acceleration in accumulation and very little in the way of profit taking, the way that we're all designed, what we think we're designed in terms of our acumen on investing to sell as the price goes up and to capture that profit and reallocate or reposition your money into something undervalued. It's not the case here. So anyways, I digress, and you say we may only have 12 to 18 months before secondary inventories are exhausted. At that point, large futures contract holders could find themselves being told there's no silver left for delivery, and they would be offered a cash payout instead. So my question to you is, what happens when that happens? Because doesn't that scenario basically expose Western exchanges essentially as operating a rehypothecated Ponzi scheme? And if confidence in the Western exchanges collapses like that, does this lead to opening the door for like the Shanghai Metals Exchange, where over the last 6 months, their volume between the metals exchange and the futures exchange cumulatively has increased over 500%, actually outpacing the COMEX, making it the second most heavily traded commodity exchange on the planet. So does this open the door if we see a force majeure or a failure to deliver in cash settlement? To me, that's the same thing as a default. But does that open the door for price discovery to finally move away from these Western exchanges, which in essence are acting like a Ponzi scheme?
So I would say absolutely yes. And I do think that that's probably how it's going to play out. In fact, I was just reading a few days ago that the Shanghai is now actively looking at expanding their exchange internationally. Hong Kong, Singapore, there were a few other places which I cannot recall right now, but they want this to become an international exchange. I think you, if I have this right, you may know better than I do, but The Shanghai is really more meant as an exchange where people are I guess, contract holders are taking delivery. It's meant for delivery as opposed to the Western exchanges. And so, as you say, it's already larger, becoming a multiple of the COMEX. I don't see why that's not going to continue. Industry and economy is shifting east. They're becoming bigger and bigger consumers. Their standards of living may not have reached ours, but the numbers or the sheer numbers of people mean the demand is shifting that way. And so, if they're doing this right and they're using an exchange as a place where you can go to actually buy the metals, then I don't see why not. And the anecdote I gave earlier of buyers of silver asking mining companies if they can have the silver, pay for it in advance, pay more than spot for it. I absolutely think that pricing is shifting east. We're going to see that continue to happen. And if I may, you talked a little bit about what I expect is maybe a 12 to 18 month time frame for these secondary supplies to drain. There's an interesting outfit out of, I believe it's out of New York, team called Gehring and Rosenzweig. You may know of them. Leigh Gehring used to run what I was told is the world's largest commodities fund several years back. He has a huge target on the silver price, but importantly, I came across a quote from him. This goes back a little while. They were reflecting on the uranium market. And I've been saying for some time that silver is in some ways the next uranium. So here's what they were saying not too long ago about uranium. And is that 5 years ago, they became uranium bulls because they saw that the market had actually slipped quietly in what they call a structural deficit. And that reactor demand was outstripping mine supply. So because of that, fuel buyers used the so-called secondary supplies to fill the gap. Now, I have to ask you, Andy, does that sound familiar? And exactly that.
That's silver right now.
That is why I repeat that quote. And this is a wise group that's been very successful, and the parallels are eerie. I couldn't when I saw that quote, I said, geez, this is what's happening in silver. And look what happened in uranium. 5 years ago, uranium was about $20, $23 a pound. Today, it's $80. And when it took off, it didn't look back. It has been 80 for some time now. I think we're going to see a complete revaluation in the silver price. And I'd have to say that, if I have to pick a number, that number is probably going to have to be 50 or north of 50 in terms of a new high, or as perhaps of a new floor in terms of the price. If you look at what it costs to produce an ounce of silver, it depends whose numbers you use and what you include, but arguably all-in sustaining costs are about $21, maybe $22. And yet, some, I think, wise silver producers will say, well, no, that's wrong. You're ignoring a bunch of sunk costs. You're ignoring what it took to find a mine. You're ignoring what it took to permit, what it took to build. They're talking about producing and maintaining production. They're not including all of the prior costs. And if you do that for a really efficient silver mine, you're actually looking at low 30s, which is where we are now. So in many ways, we're actually at probably what you'd call break even. Long term, we're at break even silver prices. So uranium was priced at $20. I remember Rick Rule saying this repeatedly. You'd produce the stuff, lose money on it, and hope to make up for it on volume, which obviously is ridiculous. And it was, a bit of sarcasm. So it was a question. It was a waiting game. It was a question of patience. If you did your work, your homework, you understood the market, you were buying uranium stocks. And if you had a way to buy uranium, look at what Sprott did. They created the uranium ETF. That actually, in many ways, helped to kickstart the uranium bull this time around, because they took a bunch of pounds of uranium off the market, quasi-permanently, I guess you could say, helped to shrink those secondary supplies, and it took off. Well, again, like you recognized very quickly, this is what's happening in the silver market, and it's unfortunate. I think I like to say patience is the rarest commodity, but if you have patience and you've done some reasonable amount of homework and you understand the setup, it's hard to go wrong. And as you alluded to, people who've bought silver at 18 see it now at 34. Many of them are not interested. And I'd like to even add one other interesting thing. Your industrial demand about 4 or 5 years ago was half of the market. If you look at the Silver Institute's projections for this year, and when I say the market, I mean the supply market, not the secondary supplies. Let's ignore that for a second. Just actual supply every year, which is mining about 85% and recycling, which is about 15%. If you add those two, you get 1 billion ounces of supply every year. That's what comes to market. Well, industrial demand 5 years ago was 50% of that. This year, it's supposed to be 70%. So where does that leave investment demand? That means investment demand has gone from 50% to now 30%. So, you've got a bunch of people saying, well, okay, even if these secondary supplies dry up, there's lots of other supply hoards that people have they've been sitting on for years, either small retail investors or even large high net worth investors who have these large hoards. And if the silver price is high enough, some of that will come to market. That's probably true to some extent, but I think they're overestimating the amount of silver that will come to market. And I ask, the big question is, at what price? And I simply, given the kind of environment that we're in, I am not convinced that sufficient silver will come to market to meet this excess demand. I just don't see it happening.
I agree with you, and I think that's very well said. One other point I want to make, just going back to what you were talking about. First of all, Rick Rule has been a very good friend of mine for a long time, and I can validate everything you just said. He was early on the uranium train and said those things exactly. And there is a very, very, very symbiotic setup that we saw with uranium that we're seeing right now in silver. You also talked about the Shanghai Metals Exchange that is gaining more credibility. It's important to note when we talk about the way that they're gaining that credibility, in my mind, is that when you buy a contract to trade silver on the Shanghai Exchange, you have to first buy a bar from one of the refiners that are pre-approved, and then they laser etch a serial number that is directly attributed to one contract. So it's inspiring confidence instead of the rehypothecation of the COMEX. But moving on, you talk about the Silver Institute. This is a good segue. I want to share something with you here. Before I ask the question, I want to show you a couple of things talking about the Silver Institute. And let's just look at this right here. This is a presentation, actually, that I gave at Rick Rule's conference here last year. And I owe a lot of this to John Little of the Pickaxe and silverwars.org. He's a hell of a researcher. But let's just look at this for a moment. In 1942, right here, there was a Senate subcommittee meeting. And you can Google this right here, S.2768, and this is what will pop up. Let's just read the first paragraph here, that the present consumption of silver for war purposes is at the rate of about 100 million ounces a year and growing rapidly. According to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. What got me going on this, before I show you the next couple of slides and then ask you this next question, and we're getting close. I think I only have one more question to ask you after this, or two. Maybe three, I lied, we'll see. But is a little bit of my own digging and research, I come to the conclusion that there is silver needed in high-tech weaponry. And I gave a speech at Jay Martin's Vancouver Resource Investment Conference 2 years ago, where I said that there's roughly 500 ounces of silver in a Tomahawk cruise missile. And a man comes up to me who was sitting out in the audience. He says, I work for the Department of Defense. I actually helped design the Tomahawk. I know there's some silver in it, at least I think there is, but I don't know how much. I'll get back to you. Well, I never heard from him again. But I went back this year, January, several months ago, and gave a different speech. And there he was after the speech and said, he had a stack of pictures in his hand. He said, this is all declassified, Andy, but he was showing me how they had trouble shooting it up vertically. It was meant to come out of a torpedo tube, and they had it on a platform off the coast of California. And by the way, Andy, you're right. There's between 13 and 14 kilograms in the cone of every Tomahawk cruise missile, and much more, and validated what I was saying. Okay, so here we have back in 1942, they're saying up to 200 million ounces per year. Now, here are the numbers that you're talking about. This is the supply-demand numbers current from the Silver Institute. And we have industrial total, 9%, electrical and electronics, 9%, and what you talk about, the big uptick in photovoltaics or solar panels, 20%, brazing and alloy solders. I have a client who works for United Airlines as a maintenance man. He says the amount of silver used in soldering is unbelievable, off the charts. 3%, other industrial, 9%, photography, -3%, jewelry, 4%, silverware. Well, where the hell is military? Why is that not in there? Now, is it because the military-industrial complex is funding wars all around the world, is what I've always been wondering. And if we look at what I was saying to you earlier, here's the setup on COMEX currently. And if you take a look at the red line here, that's the big four commercial banks. We don't know exactly who they are, but let's guess Bank of America, Citi, JP Morgan, and Deutsche Bank. I don't know who they are. It's relatively opaque. And here are the big 8, the green line. So there's 4 big that have this huge position. When you add the other 4 smaller commercial banks, you have 8 Western commercial banks that maintain the largest short position in any commodity traded on COMEX in the little old market of silver. Now, why would they do that? It's as stupid as a mud wall when countries like India, China, and Russia are doing what they're doing. You'll notice 2, 3, and 4 are platinum, gold, and palladium. And look at crude oil way down here. Remember they made crude oil negative $40 a barrel not too long ago in 2020. This is the tail wagging the dog. But this is what I'm getting at here. Why do we have the Western banks stepping on silver when we know it's needed in military manufacturing of high-tech weapons and aerospace and whatnot? And this is what, as a result, to your point, those countries, which I believe are now coordinated, they never were, they're sophisticated, they may have been, but not the way they are now. They are motivated, really motivated, and very wealthy. They're draining the exchanges. Now, the LBMA at 800 million ounces says it's basically the lowest amount of silver they've had since they started keeping records. Real damn close to it, second lowest, I think they said, of which 500 of that million belongs to the ETFs. That leaves 300 million ounces. They admit to trading 290 million ounces of silver per day, almost the entire float, right? And yet, if you dig a little deeper, you'll see that they admit that those numbers are 10 times understated, as they only post the final settlement numbers, which would imply they're trading 2.9 billion ounces of silver per day. It's going to be 3.5 times annual global mine supply, of which 95% or so is paper. It is naked futures contracts. So if you look at COMEX, you got this massive short position concentrated in the tiny little market of silver when the whole world is buying it. You go on LBMA, they're trading 3.5 times annual global mine supply with between a 4 and 6 billion ounce but to be short position on these commercial banks. This is an existential threat to these banks. And at the same time, you have these countries in the East that say, we don't need to lob missiles at them. These contracts have always allowed for delivery. Now, most of my career, no one stood for delivery. And if you realize the LBMA is 140 years old and the COMEX since 74, all the way up into the 90s, these countries, or later, turn of the century, were not motivated. Some of them were third world. They were not coordinated. They didn't have the desire to stand for delivery. They're large producers of it anyway. There was just investment in the United States, in our stocks, our bonds, our real estate. But now everything's changed. And now it looks like they are coordinated, sophisticated, motivated, and wealthy, and are standing for delivery, as you've been saying, draining the exchanges. But I think the bigger question is why? And I think this kind of explains it. So the Silver Institute supply demand omit military demand. And notably, the Department of Defense stopped disclosing these numbers in the mid-1990s, along with a few other Department of Energy and Department of State, a few others. They stopped disclosing their silver demand numbers. So given the advanced military technology, including missiles and aerospace systems, this requires substantial amounts of silver. There is speculation about the significant unreported demand from this sector. We can see they used to report it, They said we need 200 million ounces in 1942, but now mysteriously it's omitted from the supply-demand numbers, which show over a 1 billion ounce shortfall over the last 6 years between supply and demand. It is structural, as you said, 220 or 30 million ounce shortfall again this year. This is structural. And if you ask Keith Neumeyer, he'll tell you that the mining ratio for 5,000 years was 16-1, and now it's 7-1. Because silver is found in nature in a form called epithermal, like your skin is epidermis. It's found at the top, at the surface. The big deposits were found forever ago. We put it all together. Silver is depleting. Its uses are increasing, as you've mentioned, in solar panels, in green, in digital, in monetary. But where's military in all of this? It's been omitted, both from the Silver Institute and from the military. And at the same time, we see a coordinated draining of the exchanges. Now, I know this is a lot to say to set up a very simple question. And in your view, it is mine, and I don't want to put words in your mouth, but in your view, could this hidden military demand help explain why we see such a large concentrated short position held by 8 major Western banks? And is it possible that these institutions are attempting to manage or suppress silver price in light of the undisclosed government needs, despite rising global demands? In other words, are they as stupid as a mud wall? Are they trying to hold down the price so that they can continue to fund wars all around the world at the behest of the military-industrial complex? Is that too far out there to actually believe? Or if not, why did they stop reporting it? And why do we see 8 Western banks shorting this tiny market, all of it naked, which represents an existential threat? If all of these countries say we stand for delivery and they can't get the product, you see where I'm going with this. This could blow up the Western system, because if one of these banks, like Bank of America or Deutsche Bank or Standard Chartered or UBS or Citibank or JP Morgan, if they default, well, that starts a cascade in all of the other areas that they have their fingers in. And with the systemic nature of the banking system, do you think that these countries have figured out this is how you win? You don't get into a hot war with them. You just stand for delivery and take possession of all the world's commodities until it forces a default. Or in this coordinated fashion of these banks acting together, one of them says, I'm out, guys. You can go down the tube. I'm not. I'm covering. And the cascade of that covering and the rising prices, well, you can only imagine where that goes. I don't mean to ask such a roundabout question, but I need to frame it properly. Could these banks have been told, hey, silver is integral in the Western military complex, suppress the price? Does that seem logic to you? Or how else can you explain 8 Western banks suppressing this market the way they are? And those numbers are courtesy of Ed Steer. And, you know, it's pretty hard to deny that they're wrong. In fact, it's 100% true. If you look at the positioning on the Commitment of Traders report, you can see these 8 banks shorting it the way they are. What else explains it other than something along those lines is really what I'm getting at.
Well, we talked about the demand industrially. This certainly would, in my view, fall into that type of demand, because it's not kind of like, let's say, monetary or jewelry. I need it. I want it. I don't need it this year, whatever. This is steady, ongoing demand. It's absolute. That's absolutely required. That, for me, you talked about earlier, makes, I believe, silver a strategic metal. And certainly the setup seems to be there. I remember looking a couple of years back at the amount of silver that is imported by the U.S. and the amount of silver that is produced by the U.S. Unfortunately, those numbers escape me now. It's too long ago. I haven't revisited. This was the U.S. Geological Survey, and they talked about how much silver the U.S. imports. And if I remember right, they only consume about 25%. Sorry, they only have supply domestically in the U.S. for about 25% of what they actually consume. So the rest of it is coming from somewhere. It's being imported from others around the world. And I don't see why the scenario that you presented could not be the case. Honestly, why else stop reporting military consumption? Why else have certainly looks like a concerted effort to weigh on the price. And yeah, exactly. And then you have the rest of let's say you've got the East and the progressing and evolving and quickly becoming more sophisticated and informed East, saying, hey, like you say, it's so easy for us to just basically take delivery, stand for delivery on this. And, you're making it easy for us.
That's exactly like jiu-jitsu. You use your opponent's leverage against them. And I think that is something that is very important. Like you said, because they were never in a position to do it before, but they are now.
That's right. Absolutely.
And I look, there's a fine line between conspiracy and reality, Peter. And I don't mean to drag you down the conspiracy rabbit hole, because I guess the one thing I've learned over 35 years is that that line is getting thinner and thinner and thinner. What is real and what isn't? What is conspiracy? It's just very difficult for me to justify 8 banks being short to the degree that they are in this tiny little market. And as price has been going higher, they keep adding to their short positions. They're trying so hard. And today's a good example. We see silver down over $1 because they're really trying to keep it from going up. It is an existential threat to some of these banks. I appreciate your candor. I appreciate you thinking outside the box. I don't mean to make you uncomfortable, because I know that this is something that, I don't look at it as conspiratorial anymore, but some people in the mainstream may. I don't. In fact, I think it's too hard to ignore the evidence of a concentrated short position. And when we look at JP Morgan paying a $920 million fine to the Justice Department for suppressing the metals price, I think it becomes a little bit easier to understand. So I do appreciate you. I do appreciate you indulging me with answering that question. So given the current 7-to-1 mining ratio, which we see, meaning for every ounce of gold they pull out of the ground, they're pulling out 7 ounces of silver. This is depleting. As we mentioned, it used to be 16-to-1 for most of human history. In fact, even when Isaac Newton was figuring out the relationship between gold and silver for the currency, I don't know how many hundreds of years ago, he used a 16-to-1 ratio. We've seen it fall to 7-to-1, but man's ratio, so we'll call that God's ratio. That's the mining ratio. Man's ratio has averaged over the last 150 years since the Industrial Revolution about 45-to-1. That's man's ratio. And so now we see it at 82-to-1, with the mining ratio falling and demand increasing, a structural deficit in supply versus demand, an awakening by the East continuing to pillage and drain the exchanges and accumulate all that they can, a concerted effort by China to buy unrefined silver and send it home, India adding it to their state stockpiles, Russia and India buying it like it's disappearing forever and buying all they can as fast as they can. Given that backdrop, do you think it's wise at some point when we look at this ratio, which is so far deviated, not only from historical precedent, but from geological precedent, do you think it's wise to ever consider trading your silver to gold when the ratio snaps back? If it went to 42-to-1 or 40-to-1-ish, you're talking a double from today. In other words, you could trade your silver today at 82-to-1. In theory, you need 82 ounces of silver to buy 1 ounce of gold. But you could wait until it reaches just its average of the past 150 years at 42-to-1, and it's a double. But at 42-to-1, which is pretty damn close to its 200-year average price-wise, you're still 6 times higher than it's coming out of the ground at. You could argue, I could, based upon geological footprint, mining ratio, that silver is about 11 times undervalued from where it's currently priced in its relation to gold. Do you put any stock or credibility into playing the gold to silver ratio, or in this case, the silver into gold ratio?
Not at 40-to-1 and not even at 30-to-1. If we got somewhere below 15, I'd start to entertain the idea. I would say at that point, I probably would still not sell all of my silver for gold. And I'll just give you a little sort of note or anecdote. In some of my recent presentations and some of my research, some of your viewers may know of the Sprott investment group out of Canada. And Eric Sprott is a very, very well-known entity in the mining space. And Sprott points out that after oil, silver is the single most used commodity. It has the most applications. We're talking about over 10,000 different applications for silver. And the way it's going, I think that's only going to increase. We're seeing, if we look at what's happened with industrial demand for silver, where it's gone just a few years ago from 50% to something like 70% now, I think that will continue. I don't expect investment demand to ever go away completely. And then when it comes back, it can come back roaring. So it ebbs and flows, but it can really have a huge impact. Silver's uses are just being discovered more and more as we become more AI focused, more as our vehicles, as our electronics progress and become more sophisticated. You've got silver. I like to say you've got silver never more than about a yard away from you, a few feet away from you. It's in everything. People just don't realize it's in absolutely everything. So this demand, and looking at the structural deficit, S&P. So let's just back up for a sec. Interesting to note that only about 25% of mined silver every year actually comes from a silver mine. 75% comes from mining other metals. Silver is a byproduct. 75% of mined silver comes from gold mines, copper mines, lead and zinc mines. So silver depends on mining these other metals. If you look at what's been happening in the last few years, that's just made silver harder to get at. And S&P Global Intelligence really recently put out a chart. They said that silver supply from primary mines is going to peak in 2 years. We're at a point where we're consuming 20% more silver than we're producing every year already. And the Silver Institute thinks that we're going to see new record deficits over the next 5 years, not less. They don't see supply actually increasing at all, despite being at 20% demand over supply. And they actually also said just recently that they see these ongoing deficits only being met by these secondary supplies that we talked about that have been so quickly drained in the last 3 years. The setup is just obvious. If you look at what's been going on and you see and understand these numbers, to me, the setup is obvious. So to get back to your original question, I don't believe it would be wise to trade. It's hard to say. These things you can only truly answer properly when you get to a point where, because context changes. Context is important and context changes so much over time. But using the information that I have right now, if I project forward and we get to a point where the ratio falls dramatically, I really think it would have to get below 15, which is the low that we've seen, the lowest we've seen in the last 50 years or so. It would have to get at or below that for me to get rid of or to trade a bunch of my silver for gold. And as I say, I would still not get rid of all of it. There's no question. It's just too important.
I agree. It doesn't have to be an all or one endeavor, but I appreciate your candor in that as well. All right, last question, my man. And I really appreciate you coming on, Peter, and throwing all of these questions at you that are, not easy to answer. And I appreciate how you have answered them with great clarity and candor. This is an easy one, maybe not. But it's one that I think about quite a bit. And is there anything that you might think will surprise us about silver's future? What would you say as you're heading out the door here that might surprise people about what's in store for us with what the silver market is bringing to us?
So I will say in some ways that is a bit of an easy question for me, because I'll say that I think what will surprise us is just how high it's going to go. You know, I've in the book I talk about my target, my ultimate target in silver being $300. That's a 10 bagger from where we are now, approximately. Some people think that's crazy, but I used, and it's in the book, I use multiple ways at looking historically at how silver has behaved versus different asset classes. And interestingly enough, when I did the comparison and the research, each time it pointed me to a number that was not always 300, but in the range of 300. It would have been sort of maybe somewhere between 250 to say 330 or $350. And so I think it's silly when you're making long-term predictions that are, far and high to be, it would be silly for me to say something like $305 or $310. So I pick a round number, and I think round numbers technically and psychologically are important. And I think 300 is realistic. And here's how I get in one simple way to 300. We talk about the gold to silver ratio. My target long-term is for gold conservatively to reach at least $5,000. I've been saying this for, my goodness, about 15 years now. I think $5,000 is realistic. We're more than halfway there as we are. If you take a 15-to-1 ratio, which is what silver reached back in 1980, that today at $5,000 gold would put us at $333 silver. I actually think gold is going to closer to 10,000 realistically. And if at 10,000, if I'm more generous and I just use a 30-to-1 ratio, we're still at $333 silver. And one sort of last little tidbit, some of your viewers may know a guy who's not out in the public a lot, but very, very, very connected in the resource and mining space, a guy by the name Tom Kaplan, who's had multiple massive successes in resources. And so I was at a silver conference actually last week in New York and spoke to Tom. And he's a very big silver bull as well. And I said, Tom, where's this going? How high do you see this going? And he said, investment demand, I think, is the wild card that people underestimate. And I don't think we have to look far back to see that he's right. I believe it was 2020 or 2021 when investment demand for silver was over 300 million ounces. That's a third of all the silver produced every year in a single year. And as I say, this ebbs and flows. But he says we should not underestimate the impact of investment demand for silver. And when people get excited about silver, it goes absolutely wild. And everything. I'm sorry. That's okay. He thinks that's what will push silver ultimately a lot higher. And he said, no problem to see triple digit silver. So,
I agree with you, Peter. Rick Rule says the average allocation of metals from Joe and Jane six-pack to the Harvard Endowment Fund is 0.5%. And we produce some shirts that say triple digit silver. I have to admit, I have to give the original credit to Keith Newmeyer, who sent me a shirt for Christmas gift saying triple digit silver, but I like it so much I made some shirts. I don't think anything you're saying is outlandish whatsoever. And you're right, the participation by the mainstream has been so minuscule that it doesn't take much at all of a awakening by the mainstream to ignite that demand. I agree with you. And I appreciate your candor and you substantiate it well. Any other last parting words, and how do people get in touch with you or find more about your work? What's the best way for people to follow what you're up to?
So the last thing I really want to say is that if you look at silver now and you see it at 33 or so, $33, it's still cheap. That's what I want to be the takeaway. Silver is still cheap, even currently at $33. You have not missed the boat. The train has not left the station. You still have time to get on board. How long that's going to be the case, I don't know. I wouldn't be waiting. That's what I want to say. If people want to follow my work, the easiest way is go to silverstockinvestor.com. I publish the only silver-focused investment newsletter out there. You can read that. That's a way to follow the silver space on what I consider a real-time basis. because I'm putting out alerts out regularly. I have a bi-monthly letter that goes out to subscribers. You've got my book, which is The Great Silver Bull, and that gives you an overview of the opportunity in silver. I'm really happy to say I've gotten great feedback. People say, you've written it in such a way that people who are not maybe that well-versed in the silver market can get a good grasp in one book in terms of what the history of silver is, why it's so important, what the outlook is, and its scarcity, and how to get invested in silver. And so, as I say, that's a great way. It's this Great Silver Bull. You can find that on Amazon, easy to find. And other than that, I'm pretty active on Twitter. I'm also on LinkedIn. So easy to find me, and happy to connect with your viewers.
I will make sure that a link for silverstockinvestor.com for the Great Silver Bull and your Twitter and LinkedIn addresses are linked in the show notes below. Peter, you're a good man. Will I see you at Jay Martin's Vancouver Resource Investment Conference this year?
I expect to be there, Andy.
First beer is on me, brother. First beer is on me, and we can sit at the bar and talk all about what's happened in the 2 months since the election. I'm sure there'll be an awful lot to talk about. We can catch up then, and after the new year, we'll have you back on, and we can talk and discuss about all the developments that have arisen in the silver market and more. I do thank you very much for coming on. I hope you have a great rest of your afternoon. And here we are recording on Thursday afternoon, a couple days before the election. So as the Chinese curse says, my man, may we live in interesting times. These sure are. I hope you have a great weekend, and I look forward to catching up with you in person in a couple months in Vancouver.
Thank you so much, Andy. Appreciate being here.
You got it, brother. Likewise.
Little by Little with Andy Schechtman.